Hello, everyone. I'm going to just give it a couple more seconds for a few more people to get in the room. I'm really glad that you're all here today. All right, well, we can kick it off while other people are still joining. Hello, everyone. I'm Lori McLaughlin. I'm Chief Marketing Officer for Revio Insight. Thanks for joining today's conversation, why relationship manager productivity has stalled and what it's actually costing banks. I'm joined by Brian Bauer, who's our CEO. And our AI-driven platform turns ordinary banking data into the next moves for every customer-facing team so that relationship managers can free up their time and know where their biggest opportunities and risks lie. I'm also joined by Tom Hessen, who's the CEO at Nine Lenses, and his platform and team helps community and national banks uncover what clients actually need and so that RMs can show up to every conversation confident and ready to advise. So really what we're here to talk about is taking both a quantitative approach to understanding customer needs and also a qualitative approach. And we'll get into more of that in our conversation. But before we begin, just a little bit of housekeeping. We'd love to have you all in on this conversation. So at the bottom of your screen, you can use the chat or you can use the Q&A to drop a question or a comment or a point of view anytime, and I'll be monitoring that. I'm also going to create an email for you all with the recording of this session, and you're going to get it within a couple of days. All right, with that, let's dive in. Just to set the stage, just to talk about what's happening at financial institutions today in the RM's daily lives. Brian, you spent a lot of time talking to community banks and a lot on the commercial side. What does a relationship manager's typical day look like?
That is a challenging question. It varies a lot. It's a good question, but it varies a lot from institution to institution. What we know from our conversations, and really what we've also read and things like BCG's got a great report on this, is that they spend a lot of time doing administrative tasks. Right. And oftentimes they have some type of additional growth mandate, not that they know how they're going to achieve that growth. They may or may not have direction on that, but they end up spending a lot of time, moving paperwork, filling out, forms or doing checks on behalf of the customer, even in support services, which are all great things to do, to be able to service a customer relationship. But the output of that is that they end up with less than 40% or about 40% of their time available to actually do customer facing, customer growth related activities. And so that's a balance of time that, is not spent in the favor of, building robust customer relationships. And so, big part of the problem, at least as far as we see it in the market, is just that imbalance of time and the ability to maximize that time to engage customers pursuant to grow in the relationship or in terms of retaining that relationship over the long term.
Kind of wild, right? Like when we think of relationship managers, we assume they're meeting with clients all day, discovering what they need, but in fact, they're filing a lot of IT tickets just to know their own customers. I mean, Tom, what do you think is going on here? Like, why are we, it's 2026, we're halfway through the year. Why are we still caught up in this administrative quagmire?
Yeah, I'd say one of the biggest challenges that we see is just the economics that play out in commercial and business banking, whereby one banker may have 50 or 100 more clients per banker, right? And that's just the economics of any one business, can only produce so many bankers working them. And so when you only have one banker and they have 50 customers or 100, how well can they just know them? Just if you think about their time spent. And that's why we think a lot of relationships aren't that deep, right? They spend their time with their best clients, but a lot of relationships are actually transactional, right? And that goes back to they just don't have enough time in the day to get to know each customer, their business at a level of detail where they can confidently solve problems. So talking to a customer for a minute or two over the phone, catching up about their goals this quarter or next quarter, or how was the summer vacation, right? Just never produce the type of insights into the business that will identify real sales opportunities and opportunities to deepen the relationship.
Yeah. So in some ways, it's just structural. You got 200 clients and one person. I personally can't imagine trying to keep on top of a portfolio that large. And I think that's what makes AI so exciting. So how long has the industry been talking about relationship banking? Well, what does that really mean? It requires you to know everyone deeply. And I think that's finally possible. And I want to turn the conversation back to Brian. The mega banks have been, I mean, they've prioritized this use case, right, for AI. And Chase, their RMs can build meeting decks in 30 seconds. Bank of America has an agent that lets advisors talk to their CRM. So, in a twisted way, mega banks are becoming community banks as far as relationship banking goes. So, I want to turn to Brian and say, why haven't community banks kept pace? And what do you think Chase and Bank of America know about this problem, judging from their investments?
Yeah. Well, I mean, I think I'll start with the good news, actually, the great news, which is relationship banking strategies are the domain of community and regional banks, right? So, and I think while the large banks are investing in the right use case, right, and there's great value in having them out in front as spending experimental dollars to develop really use case driven AI tooling. But the reality of the situation is while they may be able to compete there on that intelligence layer and making their bankers more productive, the communities and regionals can actually back it up with real service, right? You know who your banker is, the credit decisions getting made in a way that is not 10 levels up from the banker you're talking to. You can get real access to the credit decision makers, and they can consider your business or your lending needs on a personalized basis. So I think that's great news in that the community and regionals can actually back up that strategy, whereas the largest banks can really only kind of mimic the benefits of relationship management. So I think AI is a huge opportunity for community and regional banks because it leans into what is already kind of their domain in the strategy. So that's my perspective.
I completely agree with you. Okay, let's turn to strategies that some banks are employing to up-level or help their relationship managers serve these large portfolios even better. And I actually want to start with Tom. So, Tom, you come at this kind of from what I like to think of as a qualitative end. And, we already talked about the fact that relationship managers need information about their clients' goals, fears, and business in order to advise them. Tell me how you're able to help banks get that intelligence with rich context.
Yeah. So we talk to clients a lot about becoming the trusted advisor, right? In relationship banking means different things to different banks, right? There's different degrees of service where the industry in banking just uses relationship banking and it just kind of sounds like that means everyone's service level is the same, where we know that that is not indeed true. And so we work a lot with banks that want to achieve, I like to call this trusted advisor status, which is I'm not just going to be there for you and know you and your family, but I'm going to advise you on how to run a better business, right? I'm going to bring solutions to you. I'm going to help you make decisions. I was talking to a bank here in Virginia the other day where this is like core to who they are. And they're like, if they had a hole in their roof, we want to be the first call. We want to help them figure out what roofer to call. I'm like, wow, I've never heard that before, right? But there are different degrees of what banks are willing to go to take that position of trusted advisor. And it's a mindset, right? Like what level of service do you aspire to deliver? And That's where I think, Brian, you were saying like the community banks may have a higher threshold for, what that means in their mind versus a larger bank, which is, they call it relationship banking, but it's not quite as, I'm going to see at the grocery store, right? Sort of experience. So where we go at Nine Lenses is that how do we deliver on that repeatably at scale? So every banker has different levels of experience, different comfort levels of business. And so that means that depending on who your banker is, you may or may not get a lot of value or good advice from them. And we want to level the playing field for every banker that's out there. And how do you do that? So just in short, we help our banking clients offer what we call consultations, right? Let me come do some analysis for you, Mr. or Mrs. Business Owner. Let me look at your fraud risk. Let me do an analysis. Let me look at your cash cycle. Can I do some analysis for you and come back and tell you where you're strong and weak and your opportunities? And usually every small business owner is, yeah, I'll take all the help I can get. So our technology enables our banking clients to conduct these consultations repeatably at scale, which again is a very high value interaction. Lori and I were joking before this call about like if you wanted to get your kitchen redone, you would bring, someone in and they do a consult right there in the kitchen. They look at your lighting and your floor plan and the status of your cabinets and your tile, and they'd give you a holistic recommendation on what you should be doing for your kitchen, right? That's what we are enabling banks to do repeatably around fraud, cash flow, exit planning, wealth, you name it. And so it's just a higher level of value that bankers can offer and then deliver on using technology.
Yeah, and I was impressed when we first met some months ago that you're getting all of this intelligence from a business who wants the advice, but they're completing a pretty in-depth digital assessment. And in
Yes.
fact, 90% of clients that receive one who want a consultation fill it out. So just think about all that rich information you could get if your bankers were asking the right questions.
Yeah, knowing what to ask and how to advise is kind of the magic of our technology. But like you said, so when a banker offers like a cash cycle consultation, and the customer says, "Yes, I'd love that type of analysis." Well, you book the meeting with the customer in 2 or 3 days to do the consultation. Step one then is for the banker to send them one of our digital advisory tools, a cash cycle review, a fraud risk analysis, where the customer just clicks, answers a series of questions about their business, their goals, their challenges, right? Their payment terms, all sorts of things that we would want to know. And they click the submit button and they get this instant personalized scorecard right from the bank in 5 to 10 minutes. So the customer's already getting educated through these digital experiences. And then we then share that with the banker. We give the banker coaching using AI. So we give them a detailed meeting plan on how to advise them, what questions to ask, what solutions to recommend, so that when that banker sits down and meets with that customer and does the consultation, it's a really in-depth, personalized experience that any banker can conduct, no matter if they're new or a 30-year vet.
Yeah. And like I said, I just love the kind of like richer context that you're able to collect. I'm calling that qualitative because I think it is. Um, but banks also have other levers they can pull to learn about client needs, risks, goals, and that's their data. And obviously, banks have a ton of data. We all know that. But transaction data really can provide some very key signals to a bank or a relationship manager. And I want to bring Brian in to talk about that. Um, Brian, how can transaction and other data help a relationship manager really get to know their client?
Yeah, I think it's in two ways. One is that it's not just transaction data, though that's certainly a rich source of information if you can contextualize the right types of transactions, but it's other data about the customer. Are they utilizing their checking account? What all products and services do they have? There's a lot of information that you can surface up out of the first party or core data that the financial institution has that you can make actionable if you're able to contextualize it correctly. So being able to see, customers got settlements coming in on merchant services from Square or Toast or a number of other providers, you talk about service, and I certainly love Tom's approach. But you talk about service. If you're able to look at a customer that you know is paying a high rate externally, and they may qualify for a product or service internally, nothing's better than when the client saves money and the bank wins additional business at the same time. So that really creates a win-win. So knowing those details about your customers and being able to contextualize your first party data in that way will tell you where there are growth opportunities. It'll tell you how to prioritize your engagement. Tom's right. You want to be out there and having good, high quality conversations with your customers so you can gain that consultant status. I think where we're complementary to that and where we help banks is how do I prioritize that stack and who I should be engaging most often in order to promote those conversations or open the door to those conversations.
Yeah, and this is also, I think becoming even easier with AI to extract, you
It
know,
is.
insights that can help you drive revenue. Um, but you need to have a foundation in place and a way to understand which signals to pay attention to and who needs to hear about them.
So, and on that AI really, the analysis itself, or what we call deterministic analytics, that
What
is
is that, Brian? What is deterministic?
analytics that, 1 + 1 always equals 2, right? It's statistics based, it's arithmetic based, it's, rules based, to do things like, hey, every time we see this transaction string, it means it's a loan payment to Wells Fargo, right? And so every time we see that input, we're going to get that output. It's coded very traditionally in terms of how people think of analytics. Where AI comes into play is once you establish that foundation of facts about the customer, that's either on the basis of the attribute data points you have, how long their account's been opened, the number of ACH transactions that are happening in that account, what the balance is, plus those enriched values, you can hand that off to an AI to then reason at scale, and really help tell you where the signal is within your customer relationship that should be prompting engagement out to that customer.
Yeah, it's really incredible. And it's really technology that helps banks keep tabs on their portfolio, when they're busy in meetings or sleeping. It can always be surfacing those signals. I also know, just to kind of shift the conversation ahead to another topic, I've been, surprised isn't the right word, but struck that a lot of banks, when they first see their outflows and they see the insights about what's really happening with their customers, they're kind of stunned. And so I want to talk to both Brian and Tom about this and the level to which it's even possible to really know your customers without doing some of this. Brian, I know we've got a story with a customer or with a client who was friends with a customer and still didn't know what was going on. Can you tell that story?
Yeah, I mean, your customers have complex financial lives, especially your commercial customers. Multiple checking accounts. In some cases they've got multiple loan products with you and other products and services as well. Maybe treasury customers, and there's a lot of folks inside the bank that touch that relationship between treasury and commercial bankers, et cetera. But I think it just speaks to the complexity of their lives that you could have a 20-year client in this case, that was personal friends with the president and CEO of the bank, that was revealed that, hey, this customer's got a multi-million-dollar external credit card relationship on an annual basis. That we're just humans, right? Tom mentioned earlier these bankers are managing 50 or 100 or 150 customers in a portfolio. There's a lot going on under the hood there that a human can't be expected to detect, but that's why you have technology to help you out.
Yeah. Um, it's fantastic. And I think hopefully relationship managers are going to experience a life change or change in their daily lives as some community banks adopt this technology. Um, let's talk more about, I guess, we started the conversation by talking about how much of relationship managers' time is spent on admin. A lot of that is spent preparing for meetings. And I kind of want to get a little more brass tacks now with the conversation. I'm going to turn to you, Brian, once again. You know, we've heard from countless banks about how this typically goes down. But I'm a relationship manager. I've got a meeting with a top, client coming up. What's kind of the chain of events that unfolds there usually at the bank? Requesting info, tickets, revised, it's not easy. Tell us what it's like.
Well, I've talked to some banks that have entire data team operations to consolidate the customer record in preparation for that conversation. We hear everything from it takes us 3 or 4 hours to prepare for that client engagement to, in one case, I heard 3 days to prepare for a client engagement, and that's, I think, more leaning towards that bank that has a back end data cycle that has to be gone through, and that's just to consolidate what the customer has with the financial institution across their business lines. This gets even more complex when you're talking about the treasury portfolio and trying to determine, should somebody be in treasury or under an analysis account? If they're in the treasury portfolio, what all products and services do they need? Did we look across all the data points that we had? Do we know how many wires they're sending, and how does that stack up? So I think there's a lot of assembly of information that has to go on. And that's all prior to getting to the value proposition of the customer. That's just time spent trying to understand the customer and gain this picture of the customer, so you're at least somewhat prepared walking in. So, again, a place where data and AI can fill the gap. And, also another reason why I like what Tom and team are doing, because it creates that avenue also to kind of get the customer engaged and get some information in preparation for that conversation. So you can make sure that at the end of the day, you are having a high quality conversation with the customer that's leading to the enhancement of the relationship, even if they don't grow the relationship with you today, right? It's all pursuant to growing the relationship over time. I'd love to get Tom's perspective there.
Yeah, Tom, I mean, when you think about um, institutions that recently adopted, kind of this better way of getting details from a client, how do their lives change? Like, what have you heard or seen?
So yeah, it's been great and fun to watch. The first is just knowing that I have something valuable to offer. So you pick up the phone, what is the banker going to say to either a prospect or to an existing client, right? And you just think about this as humans. You're like, well, if I know this person, I'm usually kind of checking in, I'm kind of catching up. They're probably not expecting my call. I want to see what's new in the business, and I'm really just listening for opportunities. It's like going fishing. And you may this is probably a phone call, right? Or maybe it's an email, but you're just trying to keep the relationship alive, but you're not really adding a lot of value in those brief interactions, right? So that's a very shallow conversation. It may be good to catch up and hear how the family's doing and what's going on in the business, but never do you get to the level of detail to be like, oh, wow, you need to, use this solution or this product or this digital platform, or, you need a line of credit. Like that's usually not just coming out in a 90-second interaction, right? So it's being able to know that I can add value, offer a really meaningful consultative experience. And so like if you were trying to pick up the phone and call a prospect, it's usually, hey, Lori, I'm a banker at, XYZ Bank, and we do banking with other clients in your industry, or we work with so and so down the street from you. Can we come in and talk about like your business? Like that's a sales meeting, right? Like they know that. Versus, hey, Lori, I'm Tom down at the XYZ Bank. We're out in the community trying to prevent every small business from being impacted by fraud. We're offering a complimentary, no cost, no obligation fraud risk analysis just to make sure that nobody in our community is impacted. We hate to see it. And, that's a whole different offer that's being introduced, and it's not threatening. It doesn't sound like it's free. It's valuable to me, and it's very easy for the bank to deliver, right? That's the magic. Like one of our clients, before they worked with us, they wanted to be that trusted advisor. They were offering consultations, but it was all by hand. Go to the business owner. They bring the large flip charts, like, what, you used to do on the offsites. They bring those flip charts. They'd map out everybody's process. It would take 2 or 3 weeks before that banker could come back, decompress with all the notes and figuring out what solutions to introduce, right? And it'd be a month we've saved a month off their sales process just by being able to advise that customer, bring all the right people to that consultation, right? Your TMOs, your merchant experts, et cetera, all in one interaction. And so it just starts from the beginning of offering something of value and then enabling the banks to deliver on that repeatably. And now easy to track, right? How many consultations did you do last week, right? It's a very easy metric versus what were the quality of your conversations. That's a really hard thing to measure because it's very unstructured.
It's a really good point. And as I was listening to you, I realized I'm really focused a lot on the RM experience, but there's a client experience on the other end. And so if their advisor or relationship manager is walking in and they don't really know much about them, they're probably not necessarily going to turn to that bank for advice or when they need additional products. And this relates to something I want to ask Brian, because you would think you would know if your customers or clients were unhappy, they'd probably close their accounts and move to Chase. But we know in the digital era, people don't really feel like they need to close their accounts anymore. And so I'd love Brian to talk about, some of the trends that we're seeing in our own clients' data and what really happens when you don't serve clients well.
Yeah, well, it starts with the onboarding that customer, of course, on the front side as to whether or not you even captured the deposit relationship, for instance, of your commercial loan clients. This is a almost universal problem that everybody in the industry knows about, right? It's like, you give the commercial loan, and look, sometimes you're not going to capture that relationship, and you make those decisions on those loan assets kind of at the time and place, right? Every loan's different, and every reason's different to give a loan, right? If it qualifies for credit, but the something like 57%, I think, of commercial loan customers, only 57% do they really capture the operating relationship with. And so balancers are 3 to 5 times higher when you capture on the deposit side that relationship. All banks want to get it, but you need sources of truth to be able to track. You need signals to be able to alert the team when they need to get on it. But then, to your ultimate point is, your clients often, many of them will quiet quit, right? They're going to quiet quit and move, and no one's ever going to know. And by the time they do, it's because the account's been stagnant for multiple months, or, is maybe getting ready to go inactive on the core system because it's finally hit that flag. And now you're in the know that you lost the client. And so, I think from a strategy perspective, the best defense when it comes to the client is having a good offense. And making sure you're out there proactively engaged so you don't get to that point of attrition, because once a client is starting to signal that they're attriting, that they're they've moved payroll to another account somewhere that they're paying it out of, they've slowly you see more fewer and fewer deposits and transactions coming into the account. By the time you start to see those signals, that's because they've already made a decision to start moving their business elsewhere. Maybe they went out and got a loan elsewhere because they needed it, because, look, a lot of times it's awareness that drives these things. There's somebody who's there at the time and place when they made the decision to get a new financial product. If they knew to pick up the phone and call, you every time as the banker or their primary bank, perhaps the bank that they thought they had a consultative relationship with, then the bank would be, your bank would be in the stream of being able to capture that additional business and then retain that client. So clients leave for all kinds of reasons, but getting ahead of the attrition with, building a real quality relationship with that customer is going to make sure that you have the maximum chance to be able to at least have first crack at those types of products or services when your customers need them.
Yeah, it's so interesting because we've all been in this industry a while, but churn's been a topic forever, but the nature of it has definitely changed.
Mm-hmm.
Javelin's calling it soft churn. We're calling it economic churn. The account is open, but the money's gone. And we just studied 16 million transactions to determine the rate at which money's leaving community banks. And $20 out of every $100 in demand deposit balances leaves every month for a competitor. So, and that's not even factoring on all the other economic losses, whether it's interchange, fee income, and those sorts of things. So, it's a real problem, and a lot of institutions simply can't see it. Um, all right, let's shift it back to relationship managers as we get into the backside of this event. Um, Tom, when you see an RM or an RM team operating on a high level, what things are typically true?
Well, it's very well organized and very like there's a process, right? So RMs are not terribly different from salespeople in different industries, right? And where we see success is whether the role's well defined, there's expectations in place, there's good training, um, and there's good sales oversight, right? You need to have that. If you don't have that, and again, smaller banks, just like less mature sales organizations, aren't able, right? Startups don't have the same level of maturity and capability and sophistication as larger sales organizations that got sales managers and systems and processes, right? And so, but you have to have some level of process. But generally speaking, most banks are still fairly unstructured in that just go out and talk to your customers. Well, what am I supposed to say? How am I supposed to offer? Well, here's a new credit card product that we want you to pitch, right? So I'm going to go call 100 people and offer them this sales product, this new credit card, right? And that is not great, right? Nobody wants to wake up being pitched a credit card. So a good, well-run team is being able to advise their clients on how do we help run their business, right? And again, you can't do that every day, right? You can't call the same person. The business doesn't change, but it's being able to know who to call and what to add value around and not just, hunt for the latest product. Um, that's one. The second is most RMs tend to sell what they're most comfortable with. A
Mm.
loan, as an example, right? We've heard clients call them loan dogs, right? We'll just sell a loan. Never will we ever go back to that client and talk to them about treasury services, right? Or merchant services. I'm just going on to the next loan and I'm laser focused. So leadership has got to help provide the structure and the support. It's usually more than just product training, right? That's usually where people fall short. It's just let's train them on products. But being able to systematically infuse RMs into these different solution sets that they're not naturally comfortable talking about. So yes, you got to know your customer well, but you got to know them how to solve the problems with the solutions that you have. Right. And there's a number of different things. Well, I've got a treasury officer to bring in or a merchant advisor to bring in, right? So there's a whole sales process, but there's got to be a customer journey that's mapped out from however they first came in to how are we going to deepen them through a structured process. And oftentimes that's in place with the best run teams and don't exist for those that are just go out there and hit your number.
It really is like a tale of two cities or two worlds. Like we can tell when we're meeting with a bank, like which side they're on, right? Undefined Wild West sales process or a growth-oriented data-focused bank that is, wanting to put processes. But yeah, I think it would be really difficult to both be an RM or manage them without any process. Um, Brian, we've been talking about, solutions that are available, especially now with AI, and we've also been talking about widespread problems that still exist. And I can't help but wonder, you know, what are people not saying out loud about this problem? Like, do we think bankers are aware of it, but they don't know how to address it? Do we think it's someone else's problem? Like, what do we think's going on?
And now I'm going to get in trouble.
No, you're not.
No, it's there. Those two types of banks that you mentioned, right? There's you said almost a tale of two cities, and I think the difference in each of these types of institutions and the things that people maybe aren't saying out loud is it's cultural, right? It is cultural. It is, does the financial institution one have the desire to, grow robust relationships that, it seems like the industry always shifts towards, hey, we're very deposit focused, we're very asset focused, and it kind of ebbs and flows back and forth. It was focused on assets for a long, long time, right? And but The downside of that is the failure to grow robustness in the relationships by kind of being more singularly focused on the types of products or services, or really what the bank's need is of the customer, right? And there's a way to grow that holistically, to grow wallet share and have multiple product relationships, especially with your commercial clients if you're a community bank, but also with your retail clients as well. So I think the problem that most people don't talk about is the cultural dynamic in the industry, where some folks care to grow those relationships robustly. Other institutions deprioritize that or just don't prioritize it, right? And maybe they have the growth mandate, they don't know how to execute on it. Maybe their teams don't have the training necessary, in order to be able to go execute on it. Maybe there's confusion or trepidation internally because the relationship managers and TMOs, don't know how to necessarily get the door open to the customer relationship or start that conversation with the customer. So there's could be all kinds of reasons for, that, like, or ways it manifests within the organization. But organizations that do better, or there's the mandate from the top, it is being infused or has infused somewhat into the culture to focus on the robustness of those relationships. And they're mature, right? They have a mature process internally that's tuned to go out and cultivate the relationships by adding value to them, by genuinely building the relationship. And then, of course, the earning the business is kind of the byproduct result of that.
Yeah. So what I'm hearing is, obviously have a playbook, have a process, get out of pitching products and start solving needs.
Can I just, that's a fascinating question you asked Brian, and I was thinking about that while he was answering about what is not said out loud. I think it's that you can't have the same level of relationship with every one of your business clients.
Interesting.
You just can't, right? Going back to the numbers, we work with some very large banks and talk to a lot of large banks, and they have to stratify their accounts, right? So if you have 10,000, like I'll say Wells Fargo is not a client of ours, but I know they've got 3.3 million small businesses, right? They don't have enough bankers to call and have relationships with 3.3 million small businesses, right? So what do you do, right? So, and again, I share that number just because it helps provide the scale, but every community bank has the same problem. It just may be 250,000, right? Or 500,000, or 10,000, whatever the number may be. You still don't have the capacity to know each of your customers at the same level. And so you have to kind of create tiers of your customers. Okay, these are the ones where it makes sense to deploy a banker, to have a meaningful relationship, interact, make phone calls, touch them every quarter, right? Offer the consultations we've been talking about. But maybe there's a tier where it's a $2,500 checking account, right? I don't know, whatever the number is. And you're like, there's nothing I can do to that. But it's just, it costs the bank money every time I pick up the phone and call them, right? So there are different ways to create digital tools and experiences to give them self-service advice, right? Whether it be through one of our digital advisory tools or other forms, but you kind of have to recognize not every customer warrants the type of relationship we've been talking about. And I don't think that's said enough, because the math just says you can't.
Yeah, it says you can't, but maybe it's getting easier to provide a better level of service with tech. But I totally agree with you. Um, yeah, I completely agree. And I think, expecting human beings to truly know 100 people is delusional. And so on top of process, on top of playbooks, if you don't have data or insights, it's going to be really hard. So that's my parting advice. But I wanted to ask you too, Brian, if the audience here takes one thing away today, from this conversation, what advice would you have, or what would you want them to remember?
It's that, I think AI technology is not, I think there's a lot of fear around AI technology, and, what that does to the workforce, and, is that coming for our jobs, et cetera. And there's no doubt that it's growing in its ability to reason. I mean, we read a stat you and I were talking about a month ago that says it doubles in capacity every 4.2 or 4.3 months, which, humans have a limitation in how we understand compounding, rates of growth. That means 300x rate of growth in AI capability over the next 3 years at that doubling rate. So I mean, look, that is a technology that's out there, and I think people just are afraid of it. But the reality is it can actually really be a powerful tool in those one-to-one relationships, right? Where should we apply our limited capacity as humans? Because we have to prioritize, we have to triage. To Tom's point, we can't, you treat your customers in those different stratifications on the basis of how big they are, and can you grow that relationship and be profitable with that relationship? I think AI is really maybe the biggest opportunity for the relationship banking strategy in 30 plus years. It's unlike technologies that came before it that really only benefited scale, right? Large banks buying big data so they can digitally advertise very efficiently. Those were kind of previous iterations of technology. Now, what we can do is apply reasoning at scale within your portfolio to help you identify where you should be spending your time. And it really does marry well with that human-centered approach of building a relationship with somebody.
Yeah, and it's not just for mega banks, although it is striking. JP Morgan with hundreds of AI use cases already in production. This was one of the early ones, was making RMs, meeting prep more efficient. Same with Bank of America. Chase is dropping 20 billion on tech this year, B of A 13. So they're making rapid gains, and I think, everyone should get into the game, fear or not.
Help your humans identify and take actions and make decisions more quickly. That's the name of the game, and that's where AI helps out.
Yeah. What about you, Tom?
Yeah,
What would you want the audience to remember or take away?
I'm going to just say one thing to build on Brian's point is that you don't need to make $20 billion investments to get AI. Like that's the one unique thing about AI is that you can be a small community bank and deploy AI. It's not like have to buy a supercomputer, right? That only NASA can afford, right? AI and the technologies that we're talking about scale up and scale down and can be affordable for every bank, right? Which I think is maybe not known, right? And so that's just one thing I wanted to echo for Brian. Um, what I would encourage our audience to take away is that banks are making big investments to improve the value that they're providing their customers. And there's a real war out there in terms of who's stealing whose customer, right? Because every bank is prioritizing growth. So they're coming for customers, right? And they want to deepen their own, but they're all out there trying to prospect and get new logos, which is coming from some other bank, right? So you can't just sit idly by and just say we're just going to continue to do the things that we've done. We're going to, talk about the family and the weather and the business, right? Like there's got to be some real material value that you've got to provide, because if not, some other bank's going to come along and really educate and advise that client in ways that you probably haven't done. So you've got to think about how do we become that trusted advisor? How can we integrate that into our sales process across all of our bankers? Right. And make that a real structured, repeatable, measurable, cultural experience for our bankers and our customers, right? And prospects that you're interacting with. That's ultimately what we do through technology, but it's a mindset first that we need to be out there being better advisors, not just golf buddies.
Awesome. Well, thank you both for sharing your perspectives and words of wisdom. And thanks to the audience for joining us today. As I mentioned, you're going to get an email in a couple of days with a recording. You might even get it tomorrow. And you can find us online. We're Revio Insight and Nine Lenses. And we hope to see you again soon. Have an awesome day, everyone.
Thank you.